Hi, Jonathan York Bay Financial Partners. They're looking at investment markets. Again, a pretty tumultuous week in the US. Now, it all sort of started with a non-farm payroll figure coming out on Friday that showed a very small improvement out there of just 73,000 jobs versus the sort of 110,000 expected. But the big news was the downward revisions to the previous 2 months, which took around 250,000 jobs out of the equation. Now, shortly after this, Trump then came out and said, look, we're doing so great out there. The economy's doing really good. I don't believe these numbers. They've been politically manipulated. And he fired the commissioner from the Bureau of Labor Statistics without any evidence that those figures have been tampered with. Now, the worry is that he gets someone in there who's just going to give him the data that he wants to hear, and then, really that does bring into whole question the legality and the actual accuracy of that data that's being presented. Quite interesting as well, the commissioner was actually appointed in a pretty unanimous bipartisan vote in Congress, including those who voted for her was Vice President Vance and Secretary of State Rubio. But typical sort of Trump, when he gets something that he doesn't like, he either fires them or just tries to discredit them. Now, with the Fed leaving rates on hold at the last meeting, first dissension for a while there, a 9-2 split to leave rates on hold. In a strange sort of irony, now given that weaker economy and weaker jobs data, that could now see the Fed cut interest rates. Which would be quite ironic because Trump has been sort of, criticizing Jay Powell and the Fed for quite a long time of being too slow in cutting rates. And obviously, if the Fed did then cut rates, Trump would then take credit for it and say, look, I told you so, you needed to cut rates. Interesting as well, though, a couple of the big auto companies in the US, GM and Ford, have come out and said, Ford's going to take around a $2 billion hit because of tariffs. GM's going to take around $1 billion hit. So again, what happened to the exporters paying the tariffs? The tariffs are being borne out by either the importer and the companies or the US consumer. But the other interesting fact is, what's happening to all this money that, supposedly is pouring into the Treasury? Where's it going? Now, on the back of that weaker data coming out of the US, interest rates have fallen quite dramatically. The 10 years back at 421, 2 years 373, and the 30 year is 478. And also, as we're now into August, the tariffs are now into full play. The 90 deals in 90 days was, just a bit of a sort of dream, really. I think there's been around 8 deals put into place. But interestingly, the big one, the US-China trade deal, that's all gone very quiet on that progress. But Trump is now talking about potentially 250% tariffs on pharmaceuticals. Now, if that is the case, that's hardly going to see prices fall. Again, he's been bragging this week about how much he's bringing down the prices of drugs, not by sort of 30 or 40 or 50%, but by sort of 600, 700, even 1,500%. Now, basic maths say that's impossible. You can only bring down the price of something by 100%. After that, it's free. And obviously the other big story that Trump is just trying to deflect and sort of divert, wherever possible, is the Epstein files. Quite interesting that, last week, Ghislaine Maxwell met with Trump's former attorney and the deputy AG. A week later, she is then moved from a high security prison in Florida to a low security prison in Texas. And this story just won't go away. No matter how much Trump tries to deflect, his latest attempt is to launch a grand jury inquiry into Obama for his supposedly treasonous acts regarding the 2016 election. Meanwhile, still very little progress on the sort of conflicts. You've still got Israel bombing Gaza, and you've still got Russia bombing Ukraine. And that oil's fallen back to $65 and change. Now, UK is still sort of struggling out there. The economy really does need a major sort of boost out there. But obviously the recent inflation data that was a little bit higher than anticipated does potentially put a little bit of a spanner in the works for the Bank of England to cut interest rates. Now, the EU did manage to eke out just a small growth in the second quarter, came in at 0.1% increase. But that's obviously still pretty weak, and potentially you're still looking at a further cut from the ECB. But obviously the big question mark is the potential impact of the tariffs from the US. Now in Australia, CPI down at 2.7 versus 2.9 expected year on year. Potentially that paves the way for a cut from the Reserve Bank, taking the cash rate down to 360. And then potentially a further cut in sort of maybe September or October, taking it down to 335. Now here in New Zealand, the economy is still pretty sluggish out there. It's had a reasonable sort of boost from summer tourists. The winter tourists though have been a little bit sort of thin on the ground at present. Housing market is still pretty sluggish out there as well. Indeed, the average house price still sort of fell slightly in the previous month. So really looking for the Reserve Bank to cut interest rates again, taking the OCR down to 3%. And then potentially down to sort of 275 by year end. Indeed, there are even some that think it could go down to 250 by sort of first quarter of 2026. Because despite the talk about, sort of green shoots and the economy looking like it is recovering a little bit out there, it still does need a little bit of a boost. Though it will be interesting to see what happens in the earnings season over the next sort of couple of weeks. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.